Have you ever looked at the financial markets and felt like you're watching two totally different games being played on the exact same field? Because you are. On one side, you've got this super calculated, data-heavy world of institutional finance. And on the other, you've got the chaotic, meme-fueled energy of the retail investor. Today, we're going to dive deep into these two brains of the market, figure out how they think, and see what happens when they finally collide. So at the very heart of this are our two main characters. You've got smart money and you've got ape brain. Smart money, it lives and breathes fundamental data, macroeconomic trends, thinking in terms of quarterly earnings and deep risk analysis. But the ape brain? Oh, it is operating on a completely different frequency. It's all driven by sentiment, by the vibes of a stock, and that moon or zero culture. And look, this isn't just a difference in style. It's a totally fundamental conflict in how you even see the world.
All right, so first up, let's step into the world of smart money. This is the realm of the big guys, the hedge funds, asset managers, and the institutional giants. And believe me, it's a world that is so complex, so global, and operating on a scale that is almost impossible to wrap your head around.
To really get the institutional mindset, you have to appreciate the sheer volume of information they're dealing with. We're talking global supply chains, geopolitical shifts, incredibly complex financial instruments, regulatory changes, all happening at the same time. Their entire job is to sift through all that noise and find that one tiny signal that gives them an edge. And this number right here really shows you the incredible scale we're talking about. This is not a game. $308 billion from just one firm. That shows you the immense responsibility they're carrying. Managing that kind of capital, it requires a staggering infrastructure of people, technology, and process. And here's a peek at the kind of tools they're using. I mean, this is so far beyond just buying and selling stocks. We're talking about things like forensic accounting to sniff out fraud, these complex quantitative strategies that use algorithms to find tiny market inefficiencies, and something called liability-driven investing to manage gigantic pension funds. This is deep, highly specialized work that gives them a major advantage. This quote from JP Morgan really gets to the core of how they think. See, their focus isn't on some company's cool new product. No, it's on massive global forces. How will tariffs affect a tech giant's supply chain? How is a tiny change in interest rates going to impact their borrowing costs? These are the billion-dollar questions they're trying to answer every single day. And they're playing in a totally different sandbox than most of us. You can see here, the products they trade are just mind-bogglingly complex. We're talking S&P 500 options, volatility futures, that's the VIX, and a whole universe of complex credit and debt instruments that, honestly, most individual investors have never even heard of, let alone traded. And it's not just about the money, it's about pure brain power. A single firm like Citadel employs over 265 PhDs, and they're in fields from atmospheric science to computer engineering. Over 40% of their team holds advanced degrees. They are literally deploying immense intellectual capital just to find the tiniest edge in the market. Okay, now let's do a hard pivot. We are leaving the boardroom and we're heading straight for the forums and social media feeds. Welcome to the world of the ape brain, where the rules are a little bit different. This right here, this is the question that just cuts through all of that institutional complexity. The ape brain couldn't care less about liability-driven investing or forensic accounting. It just wants to know what's really going on. What's the narrative? What does the community think? And that brings us to the core metric of this entire universe. It's not price-to-earnings ratios, it is popularity. The whole game is about tracking what individual, non-professional investors are talking about, what they're getting excited about, and what they're all piling into. And this is often how that popularity gets shaped. You see a headline like this featuring a big media personality, and it can create these powerful, super simple narratives. A single quote can move more money in the retail world than a 50-page research report ever could. It's incredible. So what we're really measuring here is emotion. Retail sentiment is the data of the ape brain. It's basically a measure of crowd psychology, of all the hype, the fear, the belief, all of it distilled from millions of posts and comments and memes from all over the internet. So for a long time, these two worlds just kind of operated in parallel. But that is changing fast. Now they're watching each other very closely. The suits are desperately trying to understand the apes, and the apes are trying to track the suits.
Now, the bridge between these two worlds is something called alternative data. It's just a catch-all term for any data that isn't, a traditional financial filing. And for the institutional world, all that chatter from the Ape Brain, it has become one of the most valuable, most sought-after alternative data sets on the planet.
And this slide breaks down exactly how that works. The vibes from the Ape Brain are literally being harvested. Data firms go in, they analyze millions of data points from social media to actually quantify sentiment. Then they package it all up and sell it directly to smart money, who then use it as a signal to make their own trades. In a weird way, the apes have become the data.
But hey, it's a two-way street. The apes are getting way smarter about watching the suits. They're using data services to track when a CEO buys or sells their own company's stock from SEC filings. They can see which hedge funds own a stock through something called a 13F filing. They can even monitor the trading activity of members of Congress. It's bringing a whole new level of transparency to the market.
So, what we've got are these two powerful competing views of the market. One is built on just immense analytical power and global macroeconomic data, and the other is built on the raw, unpredictable power of crowd sentiment. The big question is, which one do you tune into? At the end of the day, the market is a reflection of both of these things. It's this chaotic mix of quantitative analysis and raw human emotion, of PhDs and memes. And as these two brains of the market keep colliding and influencing each other, the real question for any investor isn't just about deciding which signals matter anymore. It's about understanding how the very nature of the market is changing right before our eyes.